Hey guys, it's Amin from Canadian Mortgage Services, and I'm here to talk about the mortgage deferral or mortgage payment referral that a lot of these banks are offering. These banks include TD, RBC, Scotia, CIBC, BMO, etc. Pretty much any institution that has or lends out mortgages is essentially offering this to their clients. But with that being said, a lot of these institutions aren't just going to give it to you just because you're calling in and you want to take advantage of it. You do need to demonstrate some sort of impact by this pandemic, such as a job loss, a cash flow issue. Maybe you're sick because this pandemic and you are self isolating, so you can't really go to work or work. So this whole program by these banks was designed to help those specific clients alleviate some of the stress and payment stresses that come with what they're going through. Now, I have a couple of recommendations to first have you look into before you do call the institutions, because these are things that the institutions will be looking into to determine whether or not you would qualify. Because, like I said, it's not something that's automatic. Just because you want it doesn't mean that you're going to get it. And the first week that it was announced, in fact, everyone was just picking up the phone, calling their respective banks to get this mortgage deferral, because I guess most people were looking at it as, well, if I can extend my mortgage payment by 6 months and not have to pay, why not? And so there are those that don't need it, but we're calling to take advantage of it for personal reasons, and there are those that do need it. One thing that we would recommend is that if you don't really need it and you're not going to qualify, because now we've learned that the banks aren't just handing it out, it is very helpful to reduce the or increase service levels in a positive direction by not calling them in if you don't think that you're going to qualify. So that way, the people that do need it are able to get through and get it going for them. Now, a couple of recommendations that we have is, first, if you think you qualify, these are certain things you need to look into. The first being, assess how the pandemic has affected your monthly cash flow. Don't assume that it has. Look into the numbers, see how much money is coming in, how much money is going out. That will then lead you to step two, which is essentially to find ways to reduce your monthly expenses. This could be things like a gym membership, for example. Nobody's going to the gym right now. It's social distancing, all that that whole thing. Some gyms, for example, might actually put your payments on pause while others might still be billing you. I'm not sure, but that's just something that you need to look into. Look into your available mortgage features. Now, most people don't know this, but a lot of the mortgages that are offered on a regular basis do offer features such as skip a payment, or some banks might call it mortgage vacation. Essentially, it just means that you're asking your institution to postpone a payment, or just skip it altogether. So it's plain as day. That's exactly what it means. Now, some offer it for 1 month, some might offer it for two, some might offer it for more. But this is something that your mortgage commitment, the one that you would have originally signed, or the documents that you would have received from the lawyer, would indicate what features apply to you. If worst case scenario you aren't sure, you can always reach out to your bank and they'll let you know what features you do have available. The last thing is to potentially consider looking into your savings. I mean, if you're an individual or household that has 20, 30,000 or more, or it doesn't matter how much, but if you have savings, now would kind of be the time to dip into those. The main reason that I'm mentioning the savings is because imagine you have a checkings account, savings account, and a mortgage with a bank, say TD in this example. Well, if you're calling TD to say that you're going through some hardships, which may be the case, that you're suffering some health issues, which may be the case, if they see that you have 20, 30, whatever, $1,000 in the bank account, they're not just going to approve you for mortgage deferral, because they're going to see, well, you have things that you can exercise, you have resources that you can use to make those commitments. So I'd be very conscious of that before calling in, because again, these are things that they will look into. Now, if you think you qualify, or you think that you can present a good case, the next step is to gather documentation to prove your claim, essentially. So if you're saying you're going through hardships such as a job loss, well, then maybe get something from the employer that says you have been temporarily laid off, or laid off period, or just no longer working. If it's a health thing, well, and it's if you have COVID-19, unfortunately, and you can't work because you're self-isolating, or you're taking care of somebody because they're self-isolating, or they're not well. Well, these are things that, if you get a doctor's note or some sort of documentation from a professional that can prove your claim, you're more likely to be successful in getting that mortgage deferral at the end of the day. But once you have all of those things, once you've looked into what you can do, when you call your bank, which is the final step, you'll already be prepared to overcome any objections that they may give you for reasons why they can't approve you for that request, because you've looked into your cash flow, you've looked into your expenses, you looked into reducing things, right? You've looked into the mortgage features, looked into your savings, you've gathered the documentation. How could the bank possibly say no to you if you've done your due diligence? So that's my recommendation. Definitely look into those things. Now, there are other things that you can do, such as potentially refinancing to alleviate your monthly cash flow, calling your bank to increase your amortization so it reduces your monthly payment. You can possibly ask for making only interest payments on your mortgage temporarily. So even though your payment might be, let's say, $2,000 a month on a regular day, by paying the interest only, maybe you can cut it in half. Who knows? It's very specific to what you have. And then final thing would be to if you want to exercise some form of equity takeout, that's something that we can certainly assist with as well. So if you have any questions, give us a call.